Hello everyone, welcome back to my YouTube channel. In this video, I am going to discuss about the regular income sources pertaining to the previous video where I discussed, where some of them has commented to explain in detail about the each and every segment and advantages and disadvantages with give us some examples how it will work on a like monthly basis or a quarterly basis and what is the minimum amount required to invest. So there are some of them comment. So I thought let me do a separate video to explain in detail on the same. Stay tuned till the end of the video where I'd explained in detail on the different type of stocks and what is the amount bifurcation one required to invest in each of the sources. Let's begin the video. Firstly, we'll discuss about the what are the sources which we have discussed, different source of regular income, and next we'll discuss what are the advantages and disadvantages, and what is the return expectation and investment with an examples. And lastly, we are going to discuss about the overall ratings of the different investments. Okay. Starting from list of 5 different sources which we have discussed. Starting from dividend income. So dividend income provides a regular cash flow from the company profits, offering a potential tax advantages and passive earnings. However, it depends on the company performance and market conditions affecting its reliability. So as discussed, not all the stocks will declaring the dividends. So majority of the stocks will not declare the result in spite they have a good quarter. It will not make any much difference for them. So if they have a consistent of income which they provide on a quarterly basis, if they want to expand their business and if they want to give a dividend in the form of profit sharing, so company will do that, and it's not compulsory to any company to declare the dividend as well. And next one we have discussed about the systematic withdrawal plan, SWP. Okay, so which offers the disciplined regular income from the mutual fund investments by redeeming fixed amount periodically. So for example, you will be investing on a 5,000 or 10,000 as a SIP on a monthly basis over the period of 10 to 15 years. After that you thought, okay, let me stop the SIP, I need a regular income from this. Okay, then what you will do, you will stop the SIP and you will start withdrawing certain amount of money on a monthly basis, or you can do it on a quarterly basis also based on your convenience. Okay, that's for second one. And third one we have discussed on the corporate bonds. Corporate bonds provides a fixed interest payments and the return principal at the maturity level, so offering a relatively stable income with the lower risk compared to the stocks. Okay, so corporate bonds which will give you a decent return of 8 to 10%, okay, on a yearly basis, so which has a and which will not have a much impact on the stocks, so and the overall economy. So it will be completely different. Basically, for example, the stock performance and the FD corporate bonds performance will be completely different. Okay, and here it will be a less risky as compared to the stock investment. And the fourth one which we have discussed is commercial real estate. So commercial real estate generates a regular income through the rental payments, offering a stable cash flow on a monthly basis. So usually one is going to generate a monthly income from the commercial real estate, although the ticket size will be huge as compared to the dividend income or SWP or corporate bonds. But there are many ways one can invest in a lesser amount also. I'll explain in detail with the in, upcoming slides. And the fourth one, sorry, last one we have discussed is real estate investment trust, which is REIT. Okay, so REITs provides the regular income through the rental earnings and a property appreciation, offering a diversification completely. So for example, if someone has don't have a much capital to invest through real estate, one can invest as low as 100 rupees or 200 rupees based on the name of the stocks which is listed, like Embassy. So these are the stocks trading at very low price, and you can buy one share of that also, so that you can do part of the company as well with the, and you will be eligible for the dividend income from the REIT as well. I hope it's clear with the 5 different sources. Let me explain what are the advantages and disadvantages of all 5 different sources. Starting from dividend income. So the what are the advantages of dividend income is the which provides the steady cash flow, potential for the reinvestment or tax advantage in some regions as well, and which signals the company stability and offers the passive income without selling any shares. So one major advantage is you'll be having a like cash flow on a quarterly basis, or once in a 6 month. So you'll have a regular cash flow without selling any of your shares. You'll be holding the shares for the long term or short term, but whenever you're eligible for the dividend income, so you'll get it your dividend income directly into your bank account itself. Okay, so what are the disadvantages of dividend income? So dividend income are subject to the market volatility, offering no guaranteed payments. It may lead to the tax liabilities and reduce the reinvestment opportunities as well. For example, you had invested in certain stocks, thinking that it will grow well for the period of like 2 or 3 years. Due to some or other reason, stock is about to fall. Okay, and due to any might be the market circumstances, or due to any loss in the company or any issues with the company, so the company is not able to generate a regular cash flow. Because of that reason, company will be declaring a very bad result, and stock might correct a lot as well. So in that, you might get a dividend over the next quarter or the upcoming quarter, but the value of the stock, if you had purchased at the 50,000 worth of stocks, it might come down to 40,000 or 35,000, based on the stock which you're holding to. That will be the risk which you're taking when it comes to the dividend income. I hope it's clear. Next one would be systematic withdrawal plan. So the advantages of systematic withdrawal plan is which provides the steady and predictable income while maintaining investment growth potential. So your capital will be growing, okay, based on the market return, and the simultaneously you will be getting a monthly income as well, which is better than the FD or a corporate bonds, based on the instrument which you're holding. Because the SWP, you can do it with the any of the mutual fund, like debt mutual fund, flexi cap, small cap. Based on the instrument which you're holding, the returns will be based on that. And what is the disadvantages of SWPs? So it may reduce the principal over time if withdrawals exceed the returns. For example, the scenario will be like you started withdrawing a amount, like the scenario will be like you any COVID like scenarios. Okay, you started withdrawing at the very low price. Okay, and again suddenly any crash comes up, then your the amount will be deducted from your principal amount itself. Okay, because you not generated any return so far, so the amount will be deducted from your principal amount itself. The principal amount might go down going forward if the market is continues to fall further. So to avoid that, what we can do it is, so once after you stop the SIP, wait the market to give a time till next 2 years. After you stop the SIP for 10 to 15 years, wait for 1 or 2 years, then you can start SWP. Don't immediately start the SWP as soon as you stop the SIP. You can give a horizon of time. So that's where you can able to manage it very well. Next one would be corporate bonds. So what are the advantages of corporate bonds? So corporate bonds offers a predictable interest income, higher yields than the government bonds, and it will be one of the diversification also. So once you will be buying it, so corporate bonds will definitely slightly give a better price, better return than the government bonds or FD returns per se. We can say that. Okay, but again, as it's a private sector, you will be getting a better return. But it's always suggestible to go with the corporate bonds which are highly rated. Okay, so don't fall into a trap that you might get a like 13 or 14% return as well, but it's not yet been rated highly. So always choose the best fund when you're selecting for the corporate bonds. Return might be 1% here and there, that will be fine, but you should protect your capital first. That's where the disadvantages come. So corporate bonds will carry a credit risk, potential interest rate fluctuations, and a lower liquidity compared to the stocks. So what happens when it comes to stocks? Stock, for example, if you are in the loss, you can sell it at the market value immediately. But in corporate bonds, it won't work like that. So it might come under a credit risk or any potential interest rate cut. So based on this scenario, your amount will get stuck. Okay, you will get able to liquidate, but it will take some time. Okay, so it's always suggestible to go with the highly rated corporate bonds. And where I'd explained in the previous video, Win12 is one of the website where you can go through, where it's listed majority of the funds which are with corporate bonds, and they themselves has invested almost 2% of their own money in the all the corporate bonds. So you can go with the Win12 or any of the platform which you are reliable with. The next one would be commercial real estate. So what are the advantages of commercial real estate? So which provides the consistent rental income, potential property appreciation, tax benefit, and long-term lease stability. So what will happen when it comes to commercial real estate? There are many companies who lease for 3 years, 5 years, 10 years. Okay, so that's where the owner gets the lump sum amount at the beginning, and he will also get that assurity that, so like for so many years my commercial building will be not been like coming to any selling pressure or something like that, right? If not, you'll be having a monthly income or monthly rental income as well, apart from leasing as well. Of course, it requires the higher capital as compared to the stocks, corporate bonds, or SWP. I'll explain how one can reduce the like percentage of the total corpus which is required. And what are the disadvantages of commercial real estate? So high entry cost, market volatility, property management, and challenges. So as I said rightly at the beginning of the video, so commercial real estate, it requires the, like, not in the lakhs. It requires minimum like 1 CR or 2 CR, depends. So if you're in the prime metro cities, then to like 10 CR, it will be above that, right? So it will be very difficult to buy at the like for the local retail traders. So usually the HNI will be having holding the majority of the commercial real estate, apart from like business owners, etc. That will be one of the disadvantages of commercial real estate. And the last one which we have discussed is real estate investment trust. The advantages of REIT is provides a steady and the dividend income, offers a liquidity compared to the direct real estate. For example, if you bought any land or any flat in any of the building, right? So it's very difficult to sell it, right? For example, you have to wait for the buyers or sellers. Then there will be negotiation, everything, right? It takes time. So if you are not getting the right price, you might lead to sell it at the lower price also. But when it comes to the REIT, it's easy to sell at the portal itself. Like it's regulated in the SEBI, and you can sell it at the NSE website itself based on the stock which you're holding it. So it's easily accessible, and you can liquidate then and there itself. What are the disadvantages of REITs? So REITs can be offered by affected by market volatility, interest rate fluctuations, limited control over the management. So as the REITs are listed in the National Stock Exchange, for example, if any on the global market any issue comes up, so even the REITs will also come into a selling pressure. So it's not like all the stocks are in the green, or all the stocks are in the red, or all are crashing, but the REIT stocks are going up until unless if any major reasons it will happen. Apart from that, if there any global crisis comes up, even real estate stocks will also come into a pressure. That will also be one of the as it's directly linked to the stock market. That will also be one of the disadvantages of REITs. I hope it's clear. And let me explain. For example, like you will be having a, like, let me explain. So with the example of total of 10 lakhs, how one can divide that amount with the different 5 sources, starting from dividend stocks. So dividend stocks, considering the investment of 2 lakh, so average annual return will be 5 lakh. Okay, the considered to be expected return will be 10,000. The same way SWP, if you're having, it will be 2 lakh, and let's consider that 7% is annual return. So it will be, usually it will give a nifty return as 12 to 15%. Let's assume that minimum will consider as a 7%. 14,000. Corporate bonds will be having a 8 to 10%. The minimum will be 8%. 16,000. Commercial real estate, I had mentioned as a 2 lakh. I'll explain how one can do it with the 2 lakh as well. With a minimum of 10%, definitely one can generate from the commercial real estate. It will be 20,000. REIT would be 8%, 16,000 total. Put together, it would be approximately 76,000 from the 10 lakh investment. Okay. So based on this model, so an investor can earn approximately 6 to 7,000 per month from the 10 lakh diversified portfolio. Okay, 76,000 for the entire year. On an average, 6 to 7,000 one can earn on a monthly basis based on this portfolio. So this is the completely diversified. You are invested in the stock as well, SWP, corporate bonds, so that it will be completely diversified into all segments. Okay, the return might looks less, but however, your risk will also very less as compared to the direct investment. Okay, when it comes to the dividend stock also, I had made some of the list. So for example, so and dividend stock before that, so when it comes to the commercial real estate, so there are many portals which allows you to buy the fractional shares. Okay, because as I mentioned, so and when it comes to commercial real estate, it requires the larger capital, but there are portals like PropShare, Strata, so which you can start the minimum investment of 1 lakh as well. Okay, because its properties completely managed by the professionalism, okay, with the platform, and you can rent and you'll get a appreciation on the buildings or based on the city where the commercial real estate is. Okay, and it's completely regulated by SEBI, nothing to worry on that. Okay, the portals like PropShare, Strata, RealX, and where you can start the minimum of 50,000 to 1 lakh as well, where you can generate from 9 to 12% on a yearly basis approximately. And when it comes to stocks, so there are stocks like decent like stocks like ITC, Coal India, Power Grid, Infosys. So these are the stocks which are historically gave a very good dividend yield on a quarterly basis or yearly basis. So it keep on changing basically, but historically it has been consistently giving the good dividends. So with the considering 10 lakh investment with this dividend, so on an average of 4.3% put together with these five stocks, so you can earn 43,000 as a yearly dividend income from these five stocks based on the market circumstances. I hope it's clear. So I had explained in detail about the different five sources. So thank you so much for watching the video. Do subscribe my channel and hit the bell icon. And I'll see you soon with the new exciting video. Till then, take care. Bye bye.